Hi and hello. Thank you so much for tuning in. And if you are new, welcome to my channel. My name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. Now, of late, I've been getting quite a few calls on assignments. And I realize there's still a lot of confusion out there where assignments are concerned. Now, I have done a lot of videos on assignments and HST rebates, so please go check those out. But today I'm going to address the major confusion that people are having when it comes to the actual taxes they have to pay to CRA once that assignment is officially sold. But first, you know the drill. Make sure to like, share, subscribe, tap the bell icon. It gets me motivated to keep you up to date with everything real estate. An assignment is a sales transaction where the original buyer of the property, the assignor, allows another buyer, an assignee, to take over the buyer's rights and obligations of that agreement of purchase and sale before the original buyer closes on the property. In an assignment sale, the assignor must report any profits realized from the sale in the tax year in which the right is assigned. The property will be treated as taxable business income, which is fully taxable unless the taxpayer can prove that the intention was not to flip the property. Taxpayers generally assume that the sale of real estate results in capital gains. Despite this, they must realize that it is not the nature of the property, but the buyer's intent at the time of the purchase. That determines if the property is capital or inventory. Now, that being said, if you are buying a pre-construction unit with the intention of flipping it before closing, then just don't buy it. Why? Because there are two killer tax implications on assignment sales, because of which majority of your profit will be going to the government as taxes. Let's talk about killer tax number one, the 13% HST. Do not mistake this for the HST rebate. This is the 13% HST. Let us say you bought a pre-construction unit for $750,000. You paid the developer 20% as a deposit. That's around $150,000. Now you assigned it and got it sold for $900,000. So you've made a profit of $150,000 on paper. Guess what? The government is going to charge you 13% HST on both your original deposit and the profit you so-called made. So that means you need to pay 13% on the $300,000, which is around $39,000. Now, as the seller or the assigner of the sale, you will be responsible for remitting the $39,000 HST to CRA. Now, of course, in order to sell, you need a real estate agent, you need a lawyer, and their services come with HST that you will already have paid for. That can be used as an offset, but honestly, how much of an offset can that really be? But I have some good news for you. Some time ago, the government proposed a change on our killer tax number one, and it will affect all assignment agreements that are signed on or after May 7th of 2022. Now, typically, when the government makes a new tax rule, it technically means more taxes. But surprisingly, this time you would actually be paying less. In killer tax number one, remember the HST? You'd have to pay 13% on both the deposit paid to the builder and the profit from the assignment sale. Now the government is saying that if your assignment agreement is signed on or after May 7th of 2022, you wouldn't need to pay the HST on the deposit anymore, only the profit. So if we use the same example earlier, $150,000 in deposit and $150,000 in profit, today you would only need to pay 13% on the $150,000, so you will be saving around $19,500. It's a little bit of a relief, but our killer tax number two. This is a big one. Business income. The money you made from an assignment sale is considered a business income, not capital gains. So your profit would be 100% taxable. So let's stick to the same example. You will be adding an extra $150,000 on top of your income that you've made that year. Let's just say you are in a high income bracket already and you are already making $150,000 as your annual income. So you're already paying 26% in federal taxes and around 12% in provincial taxes. But guess what? The profit will be added on top of that $150,000, taking you into the $300,000 tax bracket for that year, which means 33% in federal taxes and almost 14% in provincial taxes. Poof. there goes all your profits. Now, I have always said this in all my assignment videos. It is very important to have a knowledgeable real estate broker and a knowledgeable accountant on your side when and if you think of selling your property as an assignment. If you have a good real estate agent, they can guide you correctly. If you have a good accountant, then who knows? You may be able to save even more money. Now, does all this change the overall big picture of assignments? Not really. It's always nice to pay less in taxes. But remember, assignment sales should remain as your backup plan. It should never be your primary intention of investing in pre-construction units. Not in today's time, at least. So, if you have questions or want clarifications, please don't hesitate to call me. If you still don't know who I am, just check my Google rating and read my client reviews. Till then, take care. And if you found value and liked this video and would like to see more content, then click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, the bell icon so you don't miss any future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens the door to your dream home.